Good morning and welcome to the launch of the TheCityUK's Sovereign Wealth Funds report. For those of you who don't know me, my name is Miles Selleck and I'm the Chief Executive of the TheCityUK, and I'm delighted to be able to welcome you all to this launch, given the importance and timeliness of this subject. As the world focuses on economic rebuilding as we emerge from the COVID-19 pandemic, this report highlights how sovereign wealth funds can contribute to the long-term and sustainable growth of the UK and indeed global economy through their funding of infrastructure and other long-term investments. As I think we all know, the UK's openness to foreign business, its deep pool of expertise and experience, the transparent and world-leading legal system, and the safe and stable regulatory environment that we have here have contributed to our unique position as one of the world's leading fund management centres and global ecosystems of financial and related professional services. And that includes fundamentally and very importantly, sovereign wealth funds. Sovereign wealth funds present an opportunity for the UK to continue our leading role as a host to some of the world's largest and most important international investors. So the TheCityUK is enormously pleased to launch this report at this event, which will include a panel session with leading figures within the industry, a presentation on the report's analysis. But firstly, I'm delighted to welcome somebody who's very familiar to many of us on this call, the Minister for Investment, Lord Grimstone, who many of us will also know from his previous incarnation as the Chair of Standard Life Aberdeen, Chair of Barclays Bank PLC, and if I may wave our own flag of TheCityUK as well. So it gives me great pleasure to hand over to Lord Grimstone.
Well, good morning, everybody. Can you hear me? Because I think my video, you haven't turned my video on yet, Miles.
We can hear you, Jerry, and we've just got your video as well.
Good, thank you, everybody. Well, look, good morning, everyone. And Miles, as ever, thank you for that very generous introduction. And many thanks to the TheCityUK for inviting me to address you today. I thoroughly enjoyed my 3 years chairing the TheCityUK. Actually, I don't feel I ever actually left it. So your work continues to go from strength to strength. And I think your influence is increasing. And I think this landmark report on sovereign wealth funds is a very good example of that. So I'm very pleased to be with you today to discuss this report and to share the work that the government is doing to promote the UK as a world-leading investment destination. Of course, I think we all realise that sovereign wealth funds are becoming increasingly important to the global economy. As referenced in your report, their assets under management reached $6.4 trillion in 2020, up from $4.1 trillion in 2010, a really strong increase. And of course, sovereign wealth funds are also vitally important to the UK economy. They play a very important role as long-term investors, and they have played a key role in our economic growth. Invesco's most recent survey found that the UK's attractiveness to government agency investors significantly increased from 2019 to 2020, which of course is great news. British partnerships with sovereign wealth funds span a really diverse range of sectors, from the Abu Dhabi Investment Authority's involvement with Gatwick Airport and Thames Water, for example, to the Qatar Investment Authority backing our rising e-commerce star, the Hut Group. And as outlined in this report, and again, I suppose as one would expect, sovereign wealth funds are pivoting towards the industries of the future. And again, there's been a really strong growth in their green assets in recent years. And this focus absolutely aligns with our aim to build back greener from the pandemic by pursuing a sustainable investment strategy across the UK. Sovereign wealth funds are right up there in helping us to achieve this aim. For example, Mazda invested £35 million into our electric vehicle charging infrastructure investment fund, and that was the fund's first investment from an outside investor. Investments into energy transition in the UK were worth £26 billion in 2020, and that was driven by significant offshore wind financing. EY's 2021 Renewable Energy Country Attractive Index ranked us as the 4th best place in the world to invest in renewable energy. I'm determined to get us higher in that index, and we are determined to attract more foreign investment into this growing sector. We've invested £10 million to make Leeds and London home to a new centre for global green finance. And by harnessing the expertise of the universities of Oxford, Leeds and Imperial College London, this centre will provide world-class data to financial institutions and investors around the world to encourage them to invest in green technologies. And we're absolutely looking forward to our presidency of COP26 later this year to further drive green exports and investment, and to improve our understanding of how trade can combat climate change. And in October, led by our team at DIT here, we're going to be hosting the Global Investment Summit. I think this will probably be the most important collection of investors that we've ever got together in one place in the UK at one time, including obviously a number of the heads of the sovereign wealth funds. And we intend that summit to showcase our UK's green credentials and investment opportunities to support economic growth across the country. I was very pleased to see that when EY's 2021 Attractive Index, which was published yesterday, even though it still ranks us as number 2 as Europe's second most attractive investment destination, we've absolutely closed the gap with number 1. I'm absolutely determined to regain the top spot, and we will do this by harnessing global trade and investment to turbocharge the industries of the future. London, of course, is already Europe's preeminent tech hub, attracting a record £11.2 billion of venture capital funding in last year. And I can't resist saying that the UK is also home to more tech unicorns than Germany and France combined. And many of our unicorns have benefited from foreign investment, including from sovereign wealth funds. But there is more work to be done, and absolutely my priority is to make the UK the world's most attractive investment destination. Why is foreign investment so important to us? Well, we know that foreign invested companies are more productive, that they're more innovative, they create more jobs than British-only companies, and are also far more likely to export. And this means that foreign investment plays a really vital role in boosting growth and job creation. And my role here means that I'm in daily contact with new and existing investors to gain an understanding of their priorities and barriers to investment. We've established the UK Investment Council as a forum for global investors to advise the government. And due to their importance to the economy, I'm pleased to say that the council contains representatives from some of the world's leading sovereign wealth funds, as well as from top financial institutions and multinational companies. Part of my role is to constantly irritate my fellow ministers by raising investor concerns. And I sit here, my team do, pushing my colleagues to do everything in their power to make the UK as investable as possible. It's pretty good news that in the Prime Minister, I've got the strongest possible ally for this cause. Last year, he established the Office for Investment based out of Downing Street, and this helps us prioritise high-value investments in the industries of the future. We are actively engaging with new and existing investors including sovereign wealth funds, to improve the business environment and to really to tear down the barriers that might be stopping us landing top-tier investments. Very pleasing that we're already delivering success. In March, the Office for Investment and Abu Dhabi's Mubadala Investment Company, one of the world's leading sovereign investors, signed a long-term investment agreement. This is the first agreement of its kind for Britain. It will deepen trade and investment ties with the Emirate, which were worth £32 billion in 2019 alone. We've got an initial commitment of £800 million from Mubadala to invest in UK life sciences over a 5-year period. And this is going to be deployed alongside the United Kingdom's £200 million life sciences investment programme, giving us £1 billion to deploy. And I'm absolutely convinced that will enable the next generation of life sciences around the country to grow and prosper. I expect there to be, further commitments from the partnership. I'm looking forward to that, and I'm sure we're going to see, investment flows into technology, clean energy, and infrastructure supporting job creation, as well as bolstering our national R&D capabilities. You won't be surprised if I say that our open approach to international investment and to sovereign wealth funds, of course, must include appropriate safeguards to protect our national security. The National Security and Investment Act, which was passed just in April, is providing a strengthened investment screening framework, and I hope greater certainty for businesses. We expect clearance to most transactions to be given, well within the 30-day limit that we've set ourselves, meaning legitimate investments will be screened far more quickly than at present. And the approach we've adopted is very familiar to global investors, very familiar to sovereign wealth funds, and it's consistent with many of our major partners, including Japan and the United States, and it absolutely won't affect the vast majority of transactions into the UK. We're expecting commencements of this act later this year, and we're going to be working closely with investors to help them understand and to adapt to this new system. So in conclusion, building and maintaining relationships with sovereign wealth funds and other major investors gives us really valuable insights into how international investors view our policies and assess our strengths. And really, I do think that the role that sovereign wealth funds play going forward, of course, it's going to depend naturally on their view of the UK as an investment destination. But with the recent launch of the infrastructure, the Prime Minister's 10-point plan for a green industrial revolution, we're confident that institutional investors will continue to view the UK as a highly attractive investment proposition. Some of you may have heard me say that attracting investment has become a globally competitive sport, and we expect that we would emerge victorious in that competition. And I have to say that we have never had as many large investments in the pipeline as we're getting now. Inward investment is key to helping us forge an economy that is fit for the future. And of course, what we want it to do is to drive economic growth, deliver prosperity, and foster innovation across the country. So I'm very much looking forward to the output to today's conference. Thank you again for Miles for inviting me to launch it. And I just wish everybody a very good day. Thank you, everyone.
Minister, thank you very much. I can't think of a better way to kick off this event than with those typically thoughtful, very encouraging, and also rightly very ambitious remarks. And huge thanks to you for all the work that you've been doing. As you say, I think there are huge reasons to be optimistic. If investment is a globally competitive sport, as I do agree with you, it certainly seems the UK is likely to do better than typical England performances in football tournaments down the years. Anyway, and I don't want to jinx our performance for Euro 2020. But Minister, thank you very much for that. It is hugely appreciated. I'd like to turn now to the next part of our event this morning, which is to ask the City UK's chief economist and head of research, Angelika Bardalai, to run through the key findings of the report. Angelika, over to you.
Great. Well, thanks for that, Miles, and good morning, everyone. I am really pleased to be launching this particular research at this particular time, and you'll see why in a moment. But maybe just to start by giving you a little bit of context, if we can move on to the first slide. Some of the City UK's economic research are kind of flagship annual publications that highlight the UK's role overall as the world's leading international financial centre, or the contribution that the financial and related professional services industry makes to the domestic economy. But some of our research is more occasional sort of thought leadership pieces, focusing on particular themes or particular areas of the industry. And this new research on sovereign wealth funds, if we can just click forward, this is, of course, in the latter category. And I did think it was a really opportune moment to take a detailed look at the sector, because there have been quite a few developments involving these funds in recent months. So if we can move forward to the next slide, you can see an illustration of that here. These are, in a moment, we'll get, there we go, thank you. These are just a few of the headlines involving sovereign wealth funds that have appeared just in recent months. There were many, many more that I could have chosen from. And what's interesting is that, you know, even with this small selection that I was able to fit on this slide, you can see such diversity. I mean, just here we've got references to Asia, the Middle East, and Europe, and also to a couple of sectors, life sciences and renewables, that are really kind of hot at the moment. And I think that's already a good segue into some of the highlights of the analysis and the key themes of this research, which I want to spend just a few minutes pulling out for you now. So if we can go forward to the next slide. This slide shows you at a glance the importance of the sector. So the chart shows you that assets under management of sovereign wealth funds totaled $6.4 trillion in 2020. That was a decline from $8.2 trillion in 2019. And as you can see, that was the first annual decline in assets under management over the last decade. And of course, it's fairly obvious that that decline in 2020 was on account of the impact of the pandemic. You can see that we segmented sovereign wealth fund assets under management into we segmented the funds into commodity and non-commodity funds. And according to our estimates and calculations, that overall decline in assets under management in 2020 was driven more by a decline in assets under management of commodity funds. And that, again, fairly obviously was in turn driven largely by the sharp decline in oil prices that we saw last year. So of course, oil prices eventually recovered from that, you know, extraordinary low that we saw last March of about $20 a barrel. But the recovery didn't mean a return to 2019 prices until about January of this year. Then in the table on the right, what we've done is to put this assets under management figure into context. So sovereign wealth funds are obviously part of the wider fund management sector. And here you can see that although conventional funds under management are still about 7 times larger than sovereign wealth fund funds, sovereign wealth fund assets under management are among the largest of the alternative assets. They are larger at this point than hedge funds and private equity. So that's looking at it in relative terms, but I think, you know, even just in absolute terms, I mean, basically we can agree. I think, you know, $6 trillion is, you know, it's pretty significant. I mean, bluntly, that is a big number. We also looked in our report at the geographical distribution of sovereign wealth funds. So again, unsurprisingly, Asian and Middle Eastern countries feature pretty prominently. They account for around 2/3 of sovereign wealth fund assets in 2020. If you look at particular countries, the UAE had the largest country share, followed by China. And then in the second part of the report, we look at sovereign wealth fund investment trends. So if we can go to the next slide, please. Here, what you see is the proportion of investment deals in different sectors in both volume and value terms. And you can see that investment is fairly evenly spread across sectors like technology, property, finance, and life sciences. And then here on the next slide, please, we see trends in a little bit more detail, looking at both sector and geography. Now, here the sector designations are a little bit different than the ones I just mentioned on the previous slide, and that's because the data here are from a different source. What's really interesting here, I think, is the regional variation. So, for example, sovereign wealth fund investment in public equities is much more pronounced in North America and Europe than it is, for example, in emerging markets. That's probably not very surprising, given that as a generalization, capital markets are more developed in regions like North America and Europe than they are in other regions. But one thing I found particularly interesting is actually how little regional variation there is in infrastructure investment. So you can see that around 50 to 60% of sovereign wealth funds invest in infrastructure in every region of the world, except for in North America, and even there the figure is 41%. And the reason that I find this interesting is that in a way it almost feels a little bit counterintuitive. The usual narrative is around the infrastructure development needs of emerging markets and the massive investment opportunity that presents. And in full disclosure, I'll just say that before I joined the City UK 6 years ago, I spent 15 years working as an emerging market specialist. And so that line of thinking and that narrative is one that I'm really personally and professionally very, very familiar with. But then when you step back and you consider it, it's actually maybe not as counterintuitive as it seems if you consider some of the new investment opportunities that are coming to the fore. So we make the point that some sovereign wealth funds are looking to new industries to generate higher returns and to diversify their portfolios. And one very prominent example of this is an increased interest among some sovereign wealth funds in green infrastructure investment. And that is something that I think we see at the moment, perhaps even more in advanced economies than we do in emerging markets. And indeed, Clifford Chance, who is our partner in this research, offered some detail about how ESG issues are of particular importance and interest to sovereign wealth funds. So here on the next slide, please, we see an excerpt of that text here. But obviously there's a lot of text. Rather than kind of reading through it and talking you through it now, I just flag that it talks about things like sovereign wealth fund investment into green bonds, which, just to make explicit the link with the previous slide, green bonds are obviously often but not exclusively used to finance green infrastructure projects. But the text in the report also covers things like governance and legislative issues. So I would encourage you to take a look at that section of the report in a bit more detail. And then finally, in our research, we bring together the two previous parts of the report to discuss how the UK presents an opportunity for sovereign wealth funds as investors. Now, clearly, to some extent, sovereign wealth funds are already aware of this opportunity, which you can see from the table on the next slide, please. So this is taken from research by Invesco, which the minister has already alluded to. Invesco surveyed 139 sovereign investors and central banks. And from that research, they produced, among other things, this table showing the extent to which different jurisdictions are perceived by sovereign wealth funds as being attractive investment destinations and investment opportunities. And you can see that the UK performs really quite well in this regard. It scores roughly on par with that of the euro area as a bloc, and it's above the score of the big emerging markets like China, India, and Brazil. So I think what this means is that this is potentially a win-win situation whereby sovereign wealth funds can continue to diversify their investment, and their investment could benefit the UK as the UK gears up for post-pandemic economic rebuilding. So in conclusion, let me wrap up with just 3 key messages, which I think hopefully will summarize what I believe to be the most important themes from our new research, and also hopefully serve as a good lead into the discussion in a moment. So if we could just go to the final slide, please. There's not a lot of hard data about this sector. And I think partly because of that relative opaqueness, I think it's sort of fair to say that sovereign wealth funds still have a certain sort of mystique about them, if you like. So our contribution here is not only to bring together much of the publicly available data, but also to publish our own analysis and estimates of some of the key metrics around these funds. So in terms of those metrics, yes, sovereign wealth funds collectively have huge assets under management on which they seek good but also stable returns. And an important point which we make in the research, which I haven't really focused on here in the interest of time, is the way that sovereign wealth fund investment goals tend to make these funds sources of patient capital. And this means that sovereign wealth funds can continue to play a positive role alongside other long-term investors like insurers and pension funds to contribute to things like infrastructure financing. And yes, that includes traditional infrastructure, but also newer areas like renewable energy and green infrastructure more broadly. So in our research, we make this as a general point, but then we do also present some specific examples of recent investments, including, of course, investments into the UK. And with regard to the UK, the country is already acknowledged as a centre for international fund management, which means that the UK is really well placed to benefit from the trend that we see of sovereign wealth funds increasingly opening international offices. And ultimately, that will just enhance the UK's position as the world's leading international asset management centre. And then in addition, as I mentioned a moment ago, there is a real opportunity for sovereign wealth funds to help contribute to productivity enhancing investment and growth in the UK. So of course, we've just heard the Minister speak to this theme, and on the back of his remarks and also the discussion that's to follow now, I would definitely encourage you to take a look at our new research in a little bit more detail and get more of a sense of our analysis of this really fairly fascinating sector. So hopefully that's been helpful. I think I will end there and just hand back to Miles now. Thank you very much.
Lika, thanks very much for that. I thought that was absolutely fascinating as a run through of where we are and gives us, excuse me, plenty to talk about in the upcoming panel session. And before I introduce our terrific and very distinguished panelists, just a reminder to everybody at this event, please do feel free to put in any questions or observations that you might have using either the Q&A function at the bottom of your screen, or you can email me directly or text me directly with any thoughts, questions or comments that you might have. I'd like to now turn to introduce our panel. As I say, we've got a fantastic panel to look at this issue. So we're joined by Nicholas Rees, who is a partner in Clifford Chance's corporate practice, specialising in general corporate and corporate finance work. He's a member of Clifford Chance's Sovereign Wealth Funds Focus Group and is currently leading a review of the integration of ESG, which Angelica touched upon, into investment and portfolio management processes for sovereign wealth funds. And I should also take this opportunity to thank again Clifford Chance for their support and sponsorship for this piece of work. Also on the panel is Nick Tolchard, Head of Europe, the Middle East and Africa for Invesco Fixed Income. He was previously Head of Invesco Middle East and Chair of Invesco's business activities with sovereign investors. And Saoirse O'Connor, who is Head of the Irish Portfolio Monitoring for the Ireland Strategic Investment Fund, which is a flexible long-term sovereign investment partner, which has a statutory mandate. In short, it is a sovereign wealth fund, and Saoirse has overall responsibility for portfolio monitoring and reviews of the fund's Irish investment. So delighted to be joined by the three of you. Can't think of a better group of people to discuss this. I'd like to turn first, if I may, Nicholas, to you. One of the things that the UK financial and professional services ecosystem is really well known for is the strength of the legal system here. It's a massive point of attraction. It's one of the most successful forms of commercial arbitration law anywhere in the world. To what extent, therefore, does that leading legal system here in the UK create an attractive environment for sovereign wealth funds, in your experience? But also, what more could we do to enhance that?
Thanks, Miles. I'm delighted to be part of the panel today. I think you're right. I think the UK's legal system is important in creating that environment for sovereign wealth funds to look at the UK both as a hub for their operations, but also as an investment destination in its own right. I think certainly it's one of a number of pull factors that the UK has. I think there are sort of various aspects which sort of feed into that. Just to highlight perhaps 2 or 3, I think first and foremost the fact that the UK legal system is based on English common law, based on precedent, and generally respects the bargain struck between the parties, and it's only in limited circumstances, I think, that terms are implied into that bargain. So I think that presents parties, investors, with a sort of fair and consistent foundation for their commercial agreements, and I think that's important. Coupled with that, I think, is having a strong and independent judiciary, as you mentioned. I think we have the judiciary drawn from senior members of the legal profession, judging cases on their merits, and I think that provides a stable and I think crucially a predictable basis for parties to make investment decisions. So they have a sense of the outcome of their matters, and whether that's through courts or through arbitral proceedings. So I think that stability and predictability are key planks of the English legal system, which are very important and are attractive to investors, including sovereign wealth funds. I think the third element I'd highlight, Miles, is the fact, and the report refers to this, is having very strong regulatory framework in the UK, and sophisticated regulatory bodies to enforce the framework of rules. Sovereign wealth funds, like lots of financial investors, will invest in regulated industries, and I think therefore having sophisticated regulatory rules which are enforced in a consistent but flexible manner, I think is perhaps one of the things which sets the UK legal and regulatory regimes apart. Sovereign wealth funds, in my experience, present in certain ways unique challenges to regulators in the sense of their scale, their connections with government, and also some disclosure issues which present themselves. And I think having regulators have that flexibility, I think is an important differentiating factor. I think one contrasts that perhaps with certain other jurisdictions which perhaps apply a one-size-fits-all approach. And I think that doesn't always lend itself in the context of sovereign wealth fund groups. So I think those are all important factors. And I think looking forward, you mentioned, in what ways can the legal system be enhanced? I think very much more of the same, that stability, the predictability, the openness to investment, which, Lord Grimstone has touched upon. I think those are clearly areas that, the UK government should be harnessing. But I think, in terms of sort of 2 broad themes, I think making sure the legal system is adaptable, ensuring that it adapts to meet the challenges and developments that the market is presenting, particularly the global financial market, and where possible, perhaps being a global leader in providing that sort of regulatory framework for investment in things like fintech, AI, big data, cryptocurrencies. I think that's crucially important. Sovereign wealth funds, as the report touches upon, they're increasingly looking at different asset classes, moving away from perhaps the traditional sectors and asset classes. And so therefore, to the extent the UK can provide a regime which embraces this new technology, these new products, I think that will ensure the UK remains at the heart of sort of, the investment focus of sovereign wealth fund and other investors. And perhaps the final point I'd make, Miles, I think it's important, I think the legal system continues to adopt a long-term approach. As has already been mentioned, I think sovereign wealth funds are perhaps uniquely placed in being able to take a really long-term view of their investment profiles. And I think it's important that the legal and regulatory regimes equally adopt a long-term approach in terms of the legal environment, the tax environment. And I think by doing so, that will encourage give confidence to investors, including sovereign wealth funds, to make those long-term commitments to the UK, whether that be in long-term infrastructure projects or other projects looking at decarbonising the economy, offshore wind, for example. So I think having that long-term stable approach, I think, is crucial for the legal system moving forward.
Thank you very much for that, Nicholas. And I think that's a really interesting and I think a very powerful observation. I mean, SWFs tend to look at these things on a much more long-term basis. And the long-term nature of the legal system here, I think, is clearly a particular advantage. Another advantage that the UK has, and I think it's always telling when you speak to people within the industry, within our ecosystem, and you ask them what the single most important factor in that ecosystem success is, they don't talk about regulation, they don't talk about tax, they always, in my experience, overwhelmingly talk about talent. And just on that point, Nick, so we've got this phenomenal expertise that exists here in the UK, this pool of talent, and that's across the country, and it's also sort of cluster effects that you get in cities like London, Manchester, Edinburgh, etc. I think there was a report done by Deloitte a couple of years ago that identified London as the single biggest concentration of high-skilled jobs anywhere in the world. How can we best leverage that pool of talent and expertise in order to attract more investment from sovereign wealth funds into the UK? And is there anybody who does this well who we could be learning from?
Well, thanks, Miles, and thank you for the invitation to this report launch, which is excellent, and it's great to see the focus that City UK has on the sovereign wealth fund community. I think this theme that Nicholas picked up around predictability and your comments about long-term apply to talent just as much. The investment horizon for sovereign wealth funds is typically around 10 years. And I think the pool of talent and its sort of longevity is also really important. And I think with the pandemic and the kind of working environment we're working through at the moment, I think you're right to point out that this is very much a UK-wide talent pool. It's not just the City of London in the physical sense. I suppose in terms of leveraging the pool of talent and expertise, there's sort of two legs to this. One is the asset management pool of talent, and then the more broad pool of talent for sovereign wealth funds as an investment destination. I think in terms of the asset management pool of talent, what we've identified is that sovereign wealth funds are saying to us, and I think said to your researchers, that there's a capability gap. There is a desire on the one hand for sovereign wealth funds to control their investing, but on the other hand, we know that there are gaps in their knowledge around specific asset classes, such as has been mentioned, private assets, direct investing, where you have to have expertise at sourcing, valuing, transacting deals. All of these things are tough, and we know in direct investing the typical time frame is 3 to 4 years as well. So your talent pool is really important. It's not a transaction, it's very much a long-term relationship. I think some of the areas that really the UK can help with is around sort of innovation in asset management. We've seen this sort of barbell approach where on the one hand, a lot of the core assets of sovereign wealth funds are going into tracker products, exchange traded funds, that kind of thing, more sort of commoditized, which again is an area where the UK has a great deal of expertise in some of these interesting ETF areas, whether that's, tracking cryptocurrencies or climate or something like that. The other end of the barbell is very much the liquid alternatives, private markets, etc. Again, where the UK has got a fantastic pool of talent and expertise in managing that. Another area that I think we shouldn't overlook is just the educational capability. One of the things we can do in the UK is provide access through our financial institutions into world-leading academic institutions as well. I mean, we have partnership with Cambridge University, for example, and to bring in sovereign investors who want to build talent, we can help educate them in that process. And the great thing about that as well is that we're providing a bit of a sort of UK alumni body for the future, if you like, because we found that when you bring in sovereign wealth fund staff from Africa, from Latin America, from Asia, from the Middle East, you know, they're getting a lot by being together in one place. And one of the things we found is this sort of desire to partner. Sovereign wealth funds, by definition, are usually the only one of their kind in country. So they really do need to work with other sovereign wealth funds to get best ideas, to perhaps provide co-investment opportunities. So I think that partnership of talent and the sort of the global Britain piece is really key. I think ESG is something that is obviously going to be a major theme as we build up to COP26 and beyond. We know sovereign funds are looking, because they're part of government, they have to look at sort of zero carbon strategies. And I think the UK has probably got one of the strongest pools of expertise in ESG. Bear in mind that it's not just environment and climate, it's also social as well. And I think, again, the social agenda in the UK is an area that perhaps we don't think of in an asset management regard, but it's important. And then governance, as Nicholas said, I think, you know, it's a byword for the UK, is just the stability of the regime and the good governance we have. So these are all areas that I think we are strong as asset managers. On the sort of investment destination side of things, I just think the opportunities with our fintech sector is really strong from an investment perspective. And also technology, the Minister mentioned life sciences. I mean, clearly the UK is really strong in the sort of biotech area, but also other areas that we know sovereign wealth funds are really interested in is things like electricity generation, communications, and all of those through the lens of the National Security and Investment Act are areas where there's real opportunity for sovereign funds to invest. And I think also, bear in mind that the UK is the largest asset management market outside the US, and the opportunities for partnership with pension funds, insurance companies, sort of sub-sovereign entities such as sort of councils and so on, and even charitable foundations, probably the best in the world, certainly outside the US. And to your final question, is there anywhere we could learn from? You could see from the slide that references Invesco's study, the UK is almost there at number 2 in the world for attractiveness. The US is number 1. And I think that relates to the deal flow, the range of asset classes, the private market sophistication in the US. So one thing I would like to see is more opening up of offices of sovereign funds in the UK. I think just having the sort of feet on the ground is really important so that they become part of the ecosystem. And maybe that's the one area where we need to make sure that when we're post-pandemic and we're back to traveling, we get people over here on a permanent basis.
Nick, thanks very much for that. I think there's a huge amount to unpack there, but would completely agree. You know, I think there's a lot of reasons to be encouraged, but more that could be done. You touched on ESG, and I'd just like to sort of pick that up further with Saoirse. So, sovereign wealth funds are perhaps unfairly very much seen as vehicles for big ticket, glitzy, high-end investments. To what extent are they drivers for meaningful social impact in communities? And are we seeing more of that? Does that figure increasing in the sort of work that you're doing?
Yes, morning all. Thanks for the invitation as well. I suppose it depends on your mandate, Miles. When you look at the Ireland Strategic Investment Fund, or ISIF as we call it, it really was a pivot from the predecessor of the NPRF. We went from a very traditional sovereign wealth fund to, I suppose, a very unique mandate. ISIV looks to make a commercial return, but it also looks to create economic activity and employment in Ireland. So back to your ESG point and value and community, there's a real focus within our fund to create economic activity in Ireland. How we do that is through our mandate. So we have 5 key areas. We look at housing, we look at Indigenous, we look at Brexit, we look at carbon, and we look at climate change. So all on the ESG agenda. They're pivotal really because we look to see where we can make a difference. We look at our investments through, I suppose, a framework of additionality, displacement, and deadweight. And we look to be additional to the market. We look to invest with co-investors and bring in a multiplier effect. And we measure our GVA of what we do. In addition, we are drivers. We look at, I suppose, the diversity within our investments itself to see are we getting gender diversity and other diversity within our investments. We take board positions in our investments to drive change. And we have a heavy focus on climate change and looking at being able to, I suppose, measure our carbon footprint of our investments. Housing, like all Western, I think, economies, is an issue. And we have driven direct investments and platforms to drive housing and across the different types, whether it's PRS, whether it's investments, whether it's social housing, whether it's purchases and affordability for people. I think also, we aim to lead by our examples, and we make a difference. I don't know if there's anything else that you want to ask through that. I mean, we invest. We're very different, I think, to other funds, and maybe that's the unlocking the mystique that Angelica talked about. We don't do, I suppose, commodity, and we don't do public trading. Everything we do is private, primarily. We have a breakdown between, I suppose, 70% of our funds to private funds, which are on the property, VC, healthcare, medtech, and SME funds. And we look to really stimulate economic activity within Ireland. And then about 30% is direct debt and direct equity. And it kind of touches again back on Nick's point, is you need the people, and it's quite specialized. And you need to attract talent to be able to do, I suppose, investments, which you have to originate. It takes a while, and then you have to monitor them. I think our USP, if you'd want to call it, is our flexibility and long-term patient nature of our investment. And you could see that last year when we pivoted once again to respond to COVID, and we set up a 2 billion pandemic fund, primarily to stabilise and recover for recovery in investments in Ireland, and companies could apply, and we would look to do direct debt or direct equity, whatever was needed at that point. So through, I suppose, our mandate, our patience, our flexibility, long-term nature, and I suppose ability to be flexible and change as the environment changes, we're able to adapt and add value to our community.
Great, thanks very much for that, Saoirse. Just in our remaining time, I thought I'd group together a couple of questions and ask for your reflections on those. So the first is, and this has come up both in the comments from the Minister, in Angelica's presentation, and in the answers that, to one degree or another, all three of you have raised this point, which is around green and ESG. And to what extent, so the first question would be, first of the two would be, to what extent can sovereign wealth funds play a role in tackling climate change, tackling ESG issues, being part of the green finance revolution that we're seeing, and what's the angle that the UK can bring to that? And then if I could give you all a sort of wrap-up question to answer at the same time, which would be, in your views, what is the single most important thing that the UK could do to increase, or indeed any jurisdiction could do to increase its attractiveness to sovereign wealth funds? And I'll go in reverse order this time. So I'll start with Saoirse.
Okay. So I think on the green front, I suppose it's encouraging, innovation and looking, I suppose, across to get world-class funds into the UK or into Ireland as it is, and partnership and partnering with those funds to look across, I suppose, from really early innovation all the way to the established, and looking to see, can you segment that and invest in the different sections? So you're looking at I suppose, the easier wins now to be able to do it, but you've got your eye on 10 to 20 years time with the new innovation coming through. I would say that's my top tip would be for that, and look across the globe to get the best investors and the best funds set up within your jurisdiction. The second question, which was the top tip for, remind me again?
To make you more attractive to sovereign wealth funds.
I think it comes back to Nicholas's point. I think it is a good legal structure, good jurisdictions, that what you're operating in. I think government policy, stable, so you're not expecting any changes on tax or any kind of policy changes that would affect, I suppose, your long-term nature when you're looking over an investment over 5, 10, 15, and some of ours are 25 years. You need stability, that the dynamics and the returns are not going to change over that investment horizon.
Brilliant, Saoirse, thank you very much for that. Nick?
So on the tackling the green opportunity, again, we know that that there's no global regulatory coherence at the sort of asset allocation level in terms of ESG investing and green investing. I think the opportunity is to work really closely with asset management organizations who are building expertise on that journey. As organizations, we're incredibly client-centric and looking to provide a kind of a bespoke solution to large investors. So I think that's the sort of area where, through the portfolio analysts and portfolio managers, we can help them find the most attractive, asset allocation solutions that meet a kind of climate agenda. On the single tip for the UK, it goes back to this point about predictability, and some of the sovereign funds that I've spoken to have said, frankly, over the last few years, the UK has lost some of the sense of predictability that it once had. I think as we go into this decade, past the last few years, that should improve. And I think this kind of partnership that we're talking about today, really, between private sector and government is really important. The fact that if a sovereign fund is going to invest in the UK, they're not going to have the rug pulled from under them for some sort of short-term political reason or a regulatory change that they didn't see coming. So I think it's all about consistency and getting the right people around the table ultimately.
Great, thanks very much for that, Nick. And final word, Nicholas, with you.
Yeah, thanks, Miles. I'd echo what my fellow panelists have said. I think on the ESG side, I think in some ways, and in speaking to my sovereign wealth fund clients, I think there's a real appetite to embrace ESG issues and really to make a difference. They recognize they're in many ways in a unique position due to their scale, their capital reserves, their connections with government. So I think there's a real appetite to make a difference. Clearly, ESG is such a broad canvas of issues, but my sense is, that post-COVID will almost act as an accelerant to ESG becoming really in the front and center of investors' minds. And I think, it'll become a key plank of not just how investors such as sovereign wealth funds sort of mitigate risk or deal with compliance issues, but also there'll be a desire to really embrace ESG and make it a key plank of their investment strategy and how they drive value. And I think that's what I'm hearing from my sovereign wealth fund clients, and they can do that across a range of elements, whether that be impact investing, the move to net zero, climate change, and importantly diversity and inclusion. Embracing these elements as a central plank of their organizations, I think, can make a meaningful difference, particularly with a sort of ripple effect. And then in terms of how things can improve, I think it is that stability, that consistency, in encouraging these investors to commit to the UK over the long term, and recognizing that's being reciprocated from government and from policymakers. I think the other thing which has been mentioned about making the UK a hub for asset managers is making sure our immigration rules allow the best talent to come to the UK and do that freely. And I think that's a sort of specific example which I hear from sovereign wealth fund clients. But outside of that, I think it's that long-term investment planning which the government should embrace and encourage.
Brilliant. Thank you to all our panelists for those answers. That takes us to almost exactly the end of the event. So all that remains is for me to say a few thank yous. I'd like to thank Lord Grimstone for his terrific remarks that opened this event. I'd like to thank Angelica for her presentation and the team for their work on it. And again, Clifford Chance for their support and sponsorship of the report. I'd like to thank our terrific panelists for what I think has been a very rich and engaging discussion. So huge thanks to that. And finally, huge thanks to the team at the City UK who put this event on. It is always much harder to put a few faces onto a screen than I think we appreciate. But with that, again, many thanks and enjoy the rest of your day. Thank you very much.